Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. The Union budget took the limelight as people remained glued to the television sets as the finance minister presented the budget. Now, there are a few more important changes, especially on the commodities front, which impacts trade. Morning, JK, your thoughts on the budget? Rupee also seemed to hit all-time lows the same day the budget was announced. Please shed some light on that.
Hey, good morning, Swaraj. Yes, the budget was, I would say, very growth-oriented, ensuring macro stability, and very, very medium-term positive for the economy as well as for the markets. Obviously, the most watchers of the budget would be the investors, general investors, who were actually disappointed because of higher taxation on short-term and long-term capital gains, as well as on speculative trades. So that dampened the spirits on the markets initially, index going down as low as 400 points negative. However, it recovered later as genuine long-term investors perceived that the structural position of the economy is strong and it's going to be strong going forward. A lot of proposals for maintaining infrastructure investment at a higher level, impetus for employment and skill development, rural and the housing sector getting massive investments. All these things are very, very medium-term positive. From our market perspective, the cut in tax rate for foreign companies in India, holding foreign companies with their complete ownership of companies in India, got a big boost. Now they are more or less moving towards parity or nearer to the parity with the domestic companies, which are taxed at 25%, and foreign companies now at 35 instead of 40%. And this creates a level playing field as well as increases the ease of doing business. This is a very medium-term positive for FDI flows and also for a rupee as well. The fiscal deficit, which was brought down to 4.9 from 5.1% in FY24, is also quite a positive measure because that increases the outlook on India by global investors. We might even see a rating upgrade because consistently India has worked towards consolidating its fiscal, and near term we can see more bond market flows as well, particularly as we are heading into rate cuts by major economies and the global yields are going to be lower. So that will boost the rupee flows, rather flows into the Indian market as well. We also saw the finance minister announcing a big cut in gold and silver duties, which is again a big boost to the domestic gold jewelry industry. I think that's going to be a big support for a highly employment intensive industry. Yes, there can be some negative impact in the immediate future due to higher imports of gold when prices are lower. However, in the medium term, we might see even enhanced jewelry exports making up for most of it. So that's the major takeaway from the budget for our market. Medium term growth ensured, higher growth ensured rather, and we have rupee also, which is not going to, which is going to attract a lot of flows going forward. But in the near term, however, I think we have to focus on the global cues, which are not seeing, very much positives. Main thing is the dollar, which is getting stronger again with some sort of a safe haven buying after the Chinese slowdown. Then we have hints of slowdown in US economy as well as in the Eurozone. All these things are leading to investors taking some sanguine attitude on the markets. In fact, in the absence of economic data yesterday, people were glued on to the corporate results of Google and Tesla in US, and earnings from these giants will be key in determining the record rally that we had seen, and that was a big a clue for the global markets as well. And so far, whatever we have seen is that wherever earnings have been lower, the related stocks have got hit hard. And so the outperformance is not necessarily guaranteed in the coming months as well, in the coming reports as well, because of the market prices being overly valued and expectations are very high. So stock market is something that the domestic stock market may actually get further weakness because of the global factors. Another important factor that we are watching is the big unwind that we are seeing in the yen carry trades, because we have seen a big drop in yen against major currencies like euro and also Aussie dollar. Now, commodity currencies have been seen a big drop, and the commodity index itself has dropped almost 10% in the last 1 month. So this is an indication definitely of a strong decline in the global demand, and that doesn't augur well for the risk recession. And these are factors that Indian markets will also take note of now that the budget is over and the proposals are more of medium-term positives. These things may be taken note of by the domestic market and the rupee as well. So the rupee had hit, as you said, a new all-time low against the USD, but that is also down to the sustained demand from importers and immediate flows being not so high, and RBI having to sell more of dollars. Of course, they're armed with very large and record reserves, so that should not be a problem for the rupee. But yes, if the demand sustains and we do not see immediate big flows, particularly if the Japanese and carry trades against INR is also getting unwound, we might as well see the rupee moving further lower towards 83.80, but that should not be alarming for the markets as well. Now, finally, to touch upon the big move that we saw in the MCX gold, that has fallen nearly 9 to 10% in the last 10 days. The initial move from the record high of 74,500 was driven by the international gold falling by about 3% from 2480 to 2420. But yesterday's biggest cut in the custom duty or the overall import duty on gold and silver from 15 to 6% was a massive move, and market was probably not prepared for such a big move. More so because this was a demand that the industry was looking for a very long time, but probably had given up as well. So this was a big surprise, positive for the industry, definitely. But if someone was holding the gold position, that definitely it was a big hit to that, unless they had managed their position with the risk management. But where do we head from here? It looks like, at least from the chart, 67,000 in MCX gold seems to be a very strong support. And definitely, after seeing 74,000, I see value buying coming here, both from the genuine users as well as from retailers. So all in all, we had a very busy day yesterday, and most of the domestic market segments, but global markets still a bit low on volatility. But I won't rule out more volatility as we head into a busy schedule of economic data. Thank you.
Thank you, JK. And that was a comprehensive coverage of the budget. And just quickly summarizing,
The theme of the budget was, of course, the growth oriented and macro stability, as even the fiscal deficit numbers, they were brought down as a percentage of GDP, 5.1% in the interim budget to 4.9%. Taxation front, I think people are a little disappointed as taxes were generally raised on long-term and short-term capital gains. Skill development, rural housing sector, and infra getting a lot of budgetary allocation. And of course, you covered in detail about the big cut in gold and silver import duties and the fall in MCX gold prices. Globally, dollar is getting stronger as China, Eurozone, and even in the US, there's some sort of slowdown. So dollar is getting the safe haven buying. And another theme which we are following is the big unwind in yen carry trades against euro, Aussie dollar, and other currencies, which has led to some yen appreciation. On the domestic front, rupee hit an all-time low due to sustained demand from importers, as well as some sort of impact from this Japanese carry trade unwind. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.